Thank you for attending this private 45-minute webinar where we're going to talk about the Honda VRO option. And I know it's on a lot of people's minds, and deciding to retire even under normal circumstances is a stressful thing for most people. And clearly, these are not normal times. So we're going to do our best to address those concerns as well as the outline of this program. So my name's Tom McCarthy. I'm the founder of McCarthy and Cox Retirement and Estate Specialists in Marysville. Today, I'm going to be joined by several of our senior planners, Jim Cox, who's my business partner, Brian Mickelson, who's also a business partner, and Mark Finney. All of us are certified financial planners, and all of us have extensive experience working with Honda associates going back really to the very beginning. As promised, at the end of this webinar, if you stick around, and we'll be able to tell who did, you're going to receive a packet in the mail. It's going to include a token good for a Big Don sub at the Marysville Donatos. We can't do a lunch and learn, but we're going to try to do our best to make it up to you. In addition, there's going to be a 14-point VRO checklist I think you'll find very helpful. That too will be mailed to you. So here's what you can expect today. First, we're going to cover the outline of the program and the benefits that this VRO option may provide to you. Second, we're going to talk about some of the potential risks, though, if you do take the option. Number three, we're also going to talk about the potential risks of not taking it. And then finally, and probably the most beneficial part of the day, we're going to be taking your questions, and we're going to try our best to answer them, to answer as many of those questions as we possibly can. And I want to thank a number of you for already sending your questions. We have about 15 questions already, so we're going to have to move quickly through that when we get to that part. But our goal is that you'll leave informed. And with that, I'm going to turn it over to Jim Cox. We have a video from Jim outlining the benefits under the VRO. Thank you.
Hi, everyone. By now, you should have received in the mail information regarding the VRO, the Voluntary Retirement Opportunity that Honda announced a few weeks ago. It was sent out to all associates age 55 and older with 10 plus years of service and age 65 and older with 5 plus years of service. We've had a chance to look at the numbers, and they've come in about what we'd expect based on the announced benefits. Just to review, those benefits are 4 years added to your age, to your service, and to the base wage calculation for your pension. If you want to see what the benefit is to your pension, it's right there in your packet. Take a look at the right side, and that shows you what you were eligible for prior to the VRO being offered. On the left-hand side is what the increase would be if you elected the VRO. In addition to the pension increases that people are seeing, we're also seeing an increase to the retiree reimbursement account, to the medical credits in retirement, and to the Honda loyalty card. Specifically, what does that mean for folks? They'll get $4,000 more deposited into the retiree reimbursement account to help offset the costs of medical in retirement. The retiree credits for medical insurance purposes essentially just means that people are going to pay less for health insurance in retirement. How much less? With an associate with 20 plus years of service, they'll see $52 more in credits, which means they'll pay $52 less for health insurance. Spouses will get 50% of that. After age 65, associates with 20 plus years of service will get $20 more in credits, which means they'll pay $20 per month less, and then spouses 50% of that. So they'll get $10. In addition to the medical benefits that this package offers, Honda's also going to offer you 4 years added to the Honda loyalty card. That Honda loyalty card can be used to purchase a lease buyout, if you will, if you're interested in that. And Honda also announced as part of this package a 25% discount on manager vehicles. So that plus the loyalty card, I know we have a number of clients who are going to take advantage of that. The max service level for all associates has now been increased. It used to be a hard cap at 30 years. Now it goes up to 34 years. So that's a nice benefit for people who have kind of been waiting to retire for a few years. In addition to all of this, there's a $600 per month stipend that everyone is going to get, both option 1 and option 2 associates. It used to be just option 1 people were eligible for that, but they're going to give that to you in addition to the pension calculation that you see on your page. For lump sum folks, that $600 is not in your pension lump sum calculation on that page. It'll be in addition to that number. So if you're, age 61 or younger, that's going to be a big benefit for you, especially if you're an option 2 person. You weren't counting on that. If you want to take advantage of this option, you have till June 5th to elect it. And there's instructions in your packet to do so. Overall, if you were ready for retirement or you are planning on retiring in the next couple of years, I think that this is a very nice package. Of course, whether or not you should take this opportunity is based on your personal financial situation. Thank you.
Thanks, Jim. I know for many of you that might have been information you're already familiar with, but we certainly wanted you to have a foundation of what the program was before we pivot to the next section, which I'm going to turn this over to Mark, and Mark's going to briefly give you some of the ideas of, if you do take the program, what are the sort of risks that you'll be taking? Mark, it's up to you.
Yeah, so there clearly are a lot of advantages of this offer, and it certainly may be very attractive to many of you. But you also want to consider the risks of taking it as well. And some of those are, if you're not working at Honda, you possibly have less income coming in. And can you afford to live off of the reduced amount when we add up the rest of your retirement nest egg in terms of 401k, pension, later for some people, Social Security benefits, and possibly other income sources. And at the end of that consideration, hopefully you can maintain your current lifestyle and still be able to do all the things you have to do and hopefully all the things you want to do. But we need to obviously consider, can you live off of that potentially reduced amount? And along some of the same lines, if you determine you have to work after Honda to make things work from an income standpoint, can you find another job that pays the same with the same benefits? Usually the answer is no. The retire, rehire options that some people have taken with Honda are specifically not going to be allowed under this VRO. And so that's also a consideration. You won't be adding money to the 401k and possibly some of your other retirement nest eggs if you're not working at Honda, and Honda won't be matching it either. And so that also should be part of what you're thinking about. And then finally, the health insurance issue. It's a big one for a lot of us. I could argue the Honda health insurance plan is very strong compared to other types of insurance that are available. It's considerably less expensive as an active employee when you move on to the retiree plan. Obviously, the cost is a lot higher. And as Jim just mentioned, there is a big head start that Honda gives you in terms of some of those healthcare related benefits. But that's likely for many people to have to be part of the budget at some point. Some folks may retire from Honda as young as 55. Normal Medicare eligibility is 65. Can you bridge that 10-year gap for some folks and have to assume part of that healthcare cost in your budget? So those are some of the things to consider as far as risks of taking this VRO. And with that, I'm going to turn it over to Ryan.
Thank you, Mark. We appreciate that. So as is true in life, everything's not just cut and dried and black and white. And there are risks if you do take the VRO. There's also risks if you don't. So Ryan, if you can walk us through what I would want to consider if I'm an associate eligible, but if I don't take it, what does that mean?
Sure. So clearly there are some things that you may potentially give up if you choose not to take the VRO. And I just wanted to outline those quickly for you. One of the changes that Honda is making effective for retirement starting in 2021 is that your spouse will no longer be eligible for healthcare credits after Medicare age. So under normal circumstances, after age 65. As Jim mentioned in his segment, there's currently a benefit there that provides a monthly stipend into the retiree reimbursement account to help cover Medicare supplement insurance or other out-of-pocket expenditures after Medicare eligibility is attained. That will be going away for retirement starting next year. So that's one of the things that will be lost. A second thing is starting again for retirements in 2021, the loyalty card will no longer be offered. So currently a benefit of up to $5,400 that's available if you retire under the VRO, that will go away if you don't take it. The third is you may need to work longer at Honda if you do stay to attain the same pension numbers that you could have under the VRO. Obviously, with the addition of 4 years of service credit, the calculation that takes into account 4 additional years at your current base pay, those pension numbers have been goosed up, so to speak. And if you stick around, you may work for the next 4 years just to get back to that same pension number that you could have had under the VRO. So that's a consideration. And then finally, and this is probably the biggest risk, you may be given an involuntary separation notice if you don't take this offer. Our understanding is that that risk largely applies to exempt or salaried associates. If you are non-exempt, it's less likely that you'd be made to leave. Honda is really trying to reduce their payroll on the exempt side. And so the risk that you run if you don't take this and you're exempt is that you may be given notice a little further down the line that you're leaving anyway without any of these enhanced benefits. So that's something that you really do need to take into consideration when you're determining whether or not this is something you're going to take.
Thank you, Ryan. And I'll invite all of the planners that are on this call to come back on the screen. And I have for you a number of questions that have come in through the course of the presentation. So there's a lot of concerns and questions as we likely thought there would be. And if any of you, the rest of you have questions, please feel free to use that drop down, send the email to me with your question, and we will do our best to tackle as many of these as we can. The good news is there does appear to be some overlap in the questions. There are a lot of similar concerns that people have. So Ryan, I'm gonna throw this first one at you. The question is, if someone was already financially ready to retire in the next year or two, taking the VRO seems like a no-brainer. But for me and the rest of us who are younger or we're planning on working another 4 or 5 years, it really is tough. How do I begin to understand if I should take the VRO or pass on it?
That's a great question, and one that we're getting daily, sometimes multiple times a day right now. First of all, it does seem that for someone who had already planned to retire soon, say in the next year or two, and if we'd done that work to plan for that kind of timeline, this is a good option, especially if you're an exempt associate, as I mentioned earlier. But if your situation dictates for whatever reason that you should probably work a little longer, and if you're a non-exempt associate, the VRO is not exactly a slam dunk. It does add to your pension and medical benefits, sure, but it's not enough to completely offset or make up for the 4 or 5 or more years of income that you would have made from working. It also doesn't actually make you older. So you're no closer to receiving Social Security benefits or Medicare benefits than you were before the VRO. the bottom line is really that whether you should take this offer is very much a case-by-case decision. It will depend on your specific numbers, your family, your dependents that you may have. And we really need to look at your specific numbers to decide whether the VRO is your ticket out.
Thanks, Ryan. It looks like we have 1, 2, 3 questions around health insurance. So, Mark, I'll try to cobble these together. I may have to have a follow-up. Let me see if I can do this. One person wrote, I have 2 kids and my spouse that I still cover through Honda health insurance. One is a junior in high school, the other is a college sophomore. If I take the VRO, how do I cover them going forward?
Yeah, so we work for a number of families where this is a concern. And so I said a moment ago that comparatively the Honda insurance is very strong from a coverage standpoint. I could argue the cost for the associate and a spouse is reasonable and pretty good compared to other types of insurance. When we start adding more people on the plan, you know, kids who are either in high school or college, that's where the cost starts to get really, I would say, pretty unreasonable and a lot of times non-recommended. And so, you know, what I would have you consider is some universities have student healthcare plans. If that's an option, it might be a better fit than adding another $600 and some a month onto yet another dependent on the Honda plan. If that's not an option, or certainly, you know, for a high schooler or a younger person, there's always the healthcare exchange that all of us as Americans have access to. And so a lot of times a younger, hopefully healthy person is going to have some decent options there where that cost, I think, can be a lot more controlled than being, again, a dependent on the Honda retiree plan. And so, you know, we would encourage you as part of your planning process to look at all these options and work with a health insurance professional to see what's out there and come up with, you know, the best fit for your family.
So, Mark, just a couple other questions, and I think you covered some of these. So one person also asked, so the medical coverage in retirement, will it cover any children or dependents?
Yeah, so a dependent who's non-spouse is allowed to be on the plan until they're 26 years old. I just don't think it's a great idea if there's literally any other choice just due to the cost.
Another question, and I'm trying to make heads up, there's 2 of these I think are similar. Both he and his spouse currently work at Honda. And if he takes the VRO, does he take the VRO health insurance, or does he stay on the insurance through his wife?
Yeah, this comes up every once in a while, and what a wonderful strategy there when we have dual spouses with Honda benefits. And some confusion, I think, is coming about with this VRO and how all that works. But under most circumstances, we would highly recommend that both Honda folks actually stay separate on their own health insurance so that they retain some of these other health insurance benefits, and then the cost should be even more controlled. It's generally a mistake, a big mistake, you know, to have perhaps the first to retire say no to the retiree insurance and get on the continuingly actively employed other spouses active, you know, Honda health insurance, because then they're going to lose some of these benefits later on when the second spouse retires.
Thank you. Jim, we have a couple questions around the 401k. One of them is, I have a loan on my 401k. If I take the VRO, what happens to my loan? And then there'll be a follow-up question also.
So great question. there's really three different options you have available to you if you have a 401k loan. And the very first is if you have excess cash at the bank or at the credit union, you can pay off the loan. That's option one. Not many people elect that. There was probably a reason we took the loan in the first place. Option number two is to continue. You would leave money at the 401k and you'd continue a payment plan even into retirement. And you can structure that with Fidelity and I think up to 5 years payment plan can continue. So that's a common one that people use. The other one is, of course, you can just walk away from the loan. That one would depend really a little bit more on your tax situation and what your income looks like this year, because all of that loan would be taxable as income this year if you did that. So as part of your retirement income plan, you really want to consider, like, well, maybe not this year because you have at least half of a year of earned income coming in. Plus you are going to have to pull money from, your pension and 401k to live on for the rest of the year. But maybe as part of your retirement income plan in years 2, 3, 4, we figure out a way to either just, pay that loan off or actually at some point integrate that into the plan where you walk away and it's taxable, but you can work around that with your other income sources.
Okay, a follow-up question on the 401k is how can I avoid taxes and penalties for taking the 401k or pension? I'm under 59 and a half. Okay,
great question. Again, this is a lot of confusion there. Your 401k, if left at Fidelity, right, or partially left at Fidelity, can be tapped at age 55, not 59 and a half. 59 and a half applies to IRAs. And actually for 2020, because of the CARES Act changes on, what we're going through with the coronavirus, you actually can even pull money from an IRA this year with that prior to age 59 and a half without penalty, without the pre-penalty. It's always taxable. You can't avoid the income taxes on any of your withdrawals. But so what we generally do with folks on the retirement income plan is we will purposefully, for anyone retiring age 55 to 59 and a half, we will purposefully leave at least a portion of that 401k there at Fidelity and tap that to be your phase one of income.
Thanks, Jim. There are a number of questions regarding the single life annuity that's in the quote in the VRO, and where are the other pension options? I get questions, how do I know which one to take? This person says, I'm really confused about taking the lump sum or traditional payments. Two different guys I spoke to tell me that I'd be nuts not to take the lump sum. I'm very concerned. What do you recommend? So, Brian, you haven't had a chance to field one for a while. I'll throw this one at you.
Sure. So the pension option question is one of the most common ones that we're dealing with right now too, and it's a big one. It's important. There are two different paths there, and there's a lot of opinions about what's best. We have clients taking pension payments, and we have clients taking lump sums, and the reasons are as unique as you are. In a situation where you need the maximum amount of guaranteed income for life, the Honda pension payment will provide more income than putting the lump sum into some sort of commercial annuity. That's just the interest rate and investment world that we're in right now. Neither option is totally risk-free. You guys know that. On one side, you're going to have risk associated with the markets or investing the money if you take the lump sum. On the other side, it's as of right now, the Honda pension plan is well funded. From the numbers that we are given, it appears that they are able to meet all their obligations and so forth. But we do have people expressing concern about the long term and what will happen, and none of us know that. So neither option is totally risk-free. It's more of a question of who do you want to be responsible for providing you that portion of the income you'll need in retirement. If you take the pension as a payment, the responsibility is on Honda to provide you that income, and you don't have to worry about the stock market fluctuating on that piece of it. If you take the lump sum, you have full control and flexibility with that money. but it's on you to position the money in such a way that it will last through your retirement. And that's something we potentially help with. But again, we have clients going both ways on this. I don't mean to hedge by saying that. It's just a fact that one option may be right for one person and the other option may be right for another person. So as we're talking with you, as we're having these meetings, taking all of your sources of income and your situation into account, we'd be able to better advise you on which option better suits you and your family.
Yeah, that really is one of the biggest questions, and you did a good job of letting people know there's no clear right or wrong answer there. I've a number of questions regarding, I've got 3 of them. Some people that are on this call retired earlier this year, one in April. The question is, am I still eligible to get these benefits? Mark, can you answer that?
Yeah, isn't that amazing? Honda is going retroactive to anybody who retired after March 9th. And it's such a shock, and it's just so exciting for these folks that they were hopefully already financially secure to retire, and here's some extra icing on top of the cake. So those additional enhanced benefits are going to be coming at a later date, it sounds like, sometime probably in June or after. But yes, anybody who retired April 1st, for instance, I have a number of folks who have a May 1st retirement tomorrow. They're going to be part of this enhanced benefit. We work for a number of folks who already turned in for a June 1st retirement. That's all set, and it should be good to go. And then these enhanced benefits are actually going to come in on top of all that, which is obviously super exciting for these people.
Mark, another question we're getting a lot of regards to $600 stipend. One of the questions says, can you explain the $600 stipend again and how it works? And if I take the lump sum, is it included in that number?
Yeah, so we've recently had confirmation that your VRO letter actually does not include that $600 a month early retirement supplement that would pay out to anybody between retirement age and age 62. So there's likely going to be some extra that comes on top of, say, the lump sum, if a person elects that. It does say on the letter that the 600 is going to be applied. Interestingly enough, for both option 1 and option 2 people on that election that had to be made back in 2014. But that additional 600 is, it's just extra pension money that's going to be coming along with this deal. And there usually is some confusion about that. It doesn't have anything to do with the medical benefits. It's, again, extra pension money, whether you take it as a lump sum or you take it as an annuity payment.
Great. Jim, we have somebody who wrote the question, if I submit my VRR packet by June 5th, when do I actually retire?
So the date, as I understand it, is negotiated between, basically your manager. And they have certain dates and time where they want to get as many people out of there as soon as possible. October is when they're really trying to get everyone out of there by October. However, we've already heard where people have gotten agreements to stay till December, and maybe even beyond that. But there's a hard line, even in the communications that we've received from Honda, of a March 1st deadline. And we think that most likely has to do with the fact that the reality is interest rates are even lower right now than they were last year. So the expectation is that we will actually see an increase, a boost to lump sums starting April 1st of next year because of the interest rate move. We don't know that for sure. We won't know that again till everyone October till December timeframe. It's the first couple weeks of December where we find out what the impact on April 1st is going to be for the following year. But so the reality is there's going to be some people who are leaving June 1st, which is the earliest date, and from there, it'll be case by case with your manager and what the business need is.
Jim, we got a follow-up question to when you were talking earlier about loans on 401ks. The question was, did Jim just suggest that people should consider, quote, walking away from a loan from your 401k?
No, I did not just suggest that. First off, thank you for that clarifying that. The answer is no. In the first part, you would not want to walk away from this at all. Very, very, very few people, it would make sense to walk away from the loan. My point was to say, as you look at your tax situation and you plan out your retirement income plan, there may be in years 2, 3, or 4 of your retirement that you might be able to adjust and take some income from, after tax, if you have any Roth IRAs or taxable accounts like savings, where you can reduce your taxable income for that year and then allow for a walk away at some point where you're integrating that into your retirement plan. But that's going to be on a case-by-case example. Please don't take that as a blanket recommendation across the board.
So there's a number of people asking about discounts on leased vehicles. So one of the, and Ryan, I'll throw this at you. So what is the 25% reduction of buyout of a lease vehicle? Why is it in the packet? The others are all about the same way. So where do we see the lease vehicle 25% discount in the packet? I didn't see it. I've heard about it. I want it.
I'm actually going to kick that one over to Jim because I don't have as much familiarity with that part as he does.
So there's a VRO portal that you guys have, everyone has access to. So go in there, go under the FAQs, the facts. There's an attachment in there. Inside there, you'll be able to see the kind of the ins and outs of this particular offering. And it was part of the back and forth discussions that on one of the very first transcripts, if you will, of the plan that Honda came out with when they were discussing the ins and outs of the plan. So because I saw it depends on your department, I believe. I saw on there also a 15% reduction for a lease buyout, but clearly it also addresses a 25% reduction for manager vehicles. And that wasn't in the packet, it was in the online portal where they kind of further explain the VRO benefits.
Okay. There are a number of questions coming in about the pension. One is basically a basic question. If I take the pension payments and I pass, what will my spouse get? Question. Similar questions. Where do I see what my pension options will be? I only see single life. And then one more, just answer those two, Ryan. I'll give you the other one in a second.
Sure, one at a time. So if I take the pension payments, what does my spouse get if I pass? That all depends on which of those payment options you choose. So if you choose a single life annuity, that's a payment that goes as long as you go. In simplest terms. So if you pass away, that's it. The pension's done. If you're married, that's probably not the choice we would counsel you to take. And I think your spouse would probably appreciate it if you didn't. If you take one of the joint and survivor options at either 50, 75, or 100%, that means that percentage of the payment you got during your lifetime would continue for your spouse if you pass first. And so basically there will be a remainder payment for your spouse at either half, 75%, or 100% of what you were getting. Now, the joint and survivor benefits all take a little bit of a haircut, a reduction off of the single life annuity, which is the highest possible payment. And that's because Honda's covering 2 lives with those scenarios. So there's more risk to them in their plan that they may have to pay somebody for longer. So that's the answer to the first question. The second question, I think, had to do with what options are presented on the VRO packet. They only show you the single life annuity and the lump sum. Those are just the two most common benchmark numbers. You still retain the ability to choose any of the other ones that you may have seen in the past if you've run an estimate, the joint and survivors, the period certain options, and so forth. So really, when you go to elect the VRO, you're not committing to any certain pension choice. What you're doing is just saying, yes, I am availing myself of this offer. I do plan to go to retire within this next year, whenever the date is agreed upon. I want these extra benefits, but it's not making a pension choice at that time. You will still have to go onto either the Honda Connect website and make your pension elections there once you have your date, or you'll have to get a paper packet and fill it out, to make those same elections and turn that back in. You can still do it either of those two ways, but just know that it's a separate transaction from this VRO election.
There's a follow-up question to the comment about taking control of your pension versus using the Honda pension. It says, I'd like clarification of what was said regarding pension payments. Why would I receive more income in the longer term by taking pension payments versus a lump sum if I'm in control of my money? Question mark.
Well, there's a number of variables to that, and you can forecast different things, and it all depends on what percentages or what numbers you include in your forecast. But the statement that I made earlier about the guaranteed payout being higher from Honda has to do with, if you take your lump sum and you go and invest it with an insurance company right now and say, hey, in exchange for this chunk of money, please guarantee me a payment across 2 lives. They'll come up with a certain number that they'll pay you out per month. Right now, that number would be lower than the payment that Honda would guarantee you on a 100% joint and survivor basis. That's the only statement I was making there. It's possible that if you took the lump sum and invested it and took income out, even at that same rate that the joint survivor pension would provide, that money may last longer, or that you may have some left at the end of both lives to leave to your kids. It's just not guaranteed. So what's possible and what's guaranteed are two different things. And so again, it's everything entails some level of uncertainty or risk, and how much of that risk you want to take on and how much of it you want to leave with Honda is really up to you.
Very good, thank you. Mark, I think we've talked a lot about this in the office, and the question is, for the lump sum additional $600 a month, is it calculated for that extra, that pension, that $600 a month, is it calculated at your real age or at the age plus 4 years? So how's that $600 a month incorporated into your pension?
Yeah, there's been a lot of confusion about that. It's going off of your real age and how many months you have until you actually turn 62. So it's not like you would take a 60-year-old and all of a sudden they're 64 and you don't get any of those payments. You're actually going to get 24 months of the $600 a month payments in that example from 60 to 62. And then they do what's called a present value calculation. So it's not perfect math where you're going to take 24 times 600. It's slightly different than that, but that's the amount that folks who take the lump sum can expect to get on top of the VRO lump sum that's been stated on your letter. And then, as we already covered, that's part of the monthly annuity on top of it until the actual age of 62 if you take the pension as an annuity option.
Jim, we got a question, said, hello, I already set a date for June 1 prior to getting the VRO. My question is, can Honda change my retirement date so I can get the program?
So just like I think Mark had that, you addressed that earlier, right? Where they were going backdating for people who already set in their date. If you already elected this and they're going to make it auto for you, you don't have to do anything for that. If you already filled out your packet, then they're just going to give it to you. Whatever you elected in your packet, if you've already filled this thing out, then they'll just give you the extra benefits that the VRO offers.
And real quickly, I've had it from several clients who contacted Honda Benefits directly on this, that if you already retired after March 9th, to Jim's point, if you're eligible for these extra benefits, you're not going to get a VRO packet. You're not going to get any kind of election materials in the mail if you're already retired out. They're just going to send you the extra money as a rollover check. If you rolled it over, they're going to add the amount to your monthly pension. If you chose the monthly pension option, it's going to happen automatically. So don't be sitting there waiting by your mailbox for something that's not going to come.
Good point. And the other thing I would just editorialize for a second, there seems to be a lot of confusion in the people I'm talking to. They think that when they do the packet for the VRO that they have to make their pension election at the same time. Those are really two distinctly different decisions. Decision one is, do I want to accept the VRO program, submit it by the deadline, which I believe is June the 5th, which is the last day to do it. And we would encourage you not to wait till the last day. The managers will then tell you when, sometime after June 25th, when your retirement date will be. Once that has happened, you'll get another packet. And in that packet, you'll have to make your healthcare elections as well as your pension elections. So we have time to sort this out. So here, Brian, I'm going to circle back to you because this person, and I love this question. I apologize.
Real quick, I'm sorry.
Yeah.
I also did just go through this where somebody already elected the VRO. They were already ready for retirement and everything. So this was a gift. Within 24 hours, Honda had updated their numbers in the pension election portal. And so all of it was right there. They've already been able to elect it. They already come up with a date with their manager. So this is happening very fast if you want it to happen that fast. So it can happen, within 24 to 48 hours.
Wow, good. So Ryan, there was, I got to find this question. The questions are coming in fast and furious, guys. I know we're going to be up against the limit. We only have time for one more, but somebody wanted a clarification. Oh, doggone it, and now I can't find it. I will find it. I'll circle back to you, Ryan, if I can. This person asks, I need to pay off some bills to be able to accept this offer. Can I cash in some of the benefits to pay things off? I guess is they got to wait to get benefits to pay the benefits. I don't know of any way to cash them in early. Do you guys? One final question, because we're up against the clock. If I stayed until March 1st, would I lose those benefits that go away on January 1st?
The answer, I guess I'll weigh in. Just this is a really scary thing to weigh in on because the answer is it really depends. If it's a negotiated date with your manager and it's approved by, I believe the president needs to approve that, then maybe not. But I would make sure that I wouldn't count on that. I would make sure you have that all, buttoned up with your manager and the leadership of Honda before I would assume that you can make that happen.
Okay, guys, we're up against the time. We want to be fair to people. We said it'd be 45 minutes. We're right on that. I want everyone to know we have a number of questions we could not get to, but because we have your name and I think you had to sign in with your email, we will get to each and every one of you an answer to your question, even though we couldn't do it live on this webinar. The second thing I would want you to all know is that we have recorded this webinar. So if you want to go back and replay it or you want to get clarification, it'll be there for you. It'll be posted on our YouTube channel along with a number of other videos that we've done. I think you'll find that's a very useful resource and I would encourage you to go there. I also want you to recognize in the packet, you have a phone number and a website that has been very helpful to a lot of people to get information. If you're one of our clients, feel free to reach out to us and with an email. We'll do our best, and we're going to be talking to most of you, hopefully in the next couple of weeks. In closing, I'd like to just share a couple things with you. We believe that our clients enjoy a better quality of life, make better decisions by working with a certified financial planner. We believe that your plan needs to be more than just talking about your one-off pension election. It needs to take into account a plan for income, a plan for how you should invest your money, a plan for taxes, estate planning, insurance. We believe you're more than just a lump sum. So our purpose and mission is pretty clear. We hope to provide you a greater peace of mind, to take these issues off the table for you. So frankly, you can be free to pursue what God has in mind for you and have a more purpose-driven life. Our hope for each and every one of you is that you've found something helpful in this webinar, that we've addressed one or more of your concerns. We know this is a difficult time for everyone in this country, and you have this added burden. Know that all of you are on our thoughts and prayers. We're here to serve you, and we want to just tell you thank you for being part of this event today.